Traders, Anthony here. We've got this move here, these red candles, and we have this level here where this move originated. The thing with this is, if we grab this, I'm just going to measure from here to here. See the retrace, give or take, that one was a lot deeper. You know, we've got this more or less a measured move that has occurred previously, and I'm always looking for the possibility that, you know, we get that. On the daily time frame, this is going to be my setup, something like that. The only thing with this is we may or may not get a fill. I mean, it can take 1, 2, 3. How many days were we here? You know, 1, 2, 3, 4. You know, 3 or 4 days before it kind of retraced. So if we want to get into the action, then we go to the lower time frame and we look at the 4-hour. But understand that this is overextended on the daily. Where's my fib? Pull it from the high of that distribution down. And look, at it works. Like this pullback into the 61.8, my yellow zone here on the daily, is definitely something to consider. Now, it's Wednesday. Who knows? We could see more downside. We might get a shallow pullback, so therefore a 4-hour or a 1-hour trade setup. And then come Friday, you know, smart money decides to hit stops and they run it up and take everyone out, right? So that's something to think about. That's an idea for the daily time frame. So let's just go down to the 4H. Whenever market is overextended on the daily, I'm always a little bit reluctant, or not reluctant so much, but very wary. So this is why you have to have very tight risk management. So this is the daily. Now, if I'm looking at this from the 4-hour perspective and trading it off these 4-hour levels, I mean, I do trade, most of my trades are off the 4H. You see, our measured move on the 4H is different, right? So we've got that, you know, give or take, you know, there. Go back and, you know, we'll see. You've got to look at the average true range and get your ATR value. So on the 4H, my trade idea would be something like this. There it is. But on the daily, that's my idea. Now, the volatility is relative to the time frame, so we could stick with the 4-hour, and that would be quite a nice trade if it played out. So here is the perfect scenario trend where we get these. Yeah, the pullbacks didn't really come into the level, did they? And that happened, and then we got this. That's a nice one. Look at this. See, I love these, where we get these ranges, and we get a candle like that. That's the setup you're looking for, and you get this imbalance. Trades back up, rebalances, and then look at that. That's beautiful. Where am I going with this? Actually, I'm going to go down to a 5-minute chart. I'm going to show you something in a minute, how we can navigate the volatility really, really well. There's two ideas. Trade it on the daily, that's one. Trade it on the 4H, but understand that it's overextended on the daily. Therefore, at some stage, this is going to look to blow through here. And whether it happens here or tomorrow or the next day, who knows, right? But understand the risk. I guess what I'm saying is, be careful with your position sizes. I always go in with consistent, conservative position sizes. So you really got to keep a handle on the risk. Anyway, so there's a couple of ideas, daily and 4-hour. What I want to do is I want to show you something that I think is pretty special. We're going to have a look at some red dots. I'll tell you now, we go back 10 and we got a 10 out of 10 win rate. Right, so there it is. This is the dot. This is our indicator. It's much better when we're trading into a like the New York Open. This is the New York Open here, this line. It tends to be in a bearish trend. So what we're looking for here is this red bar accompanied with this red bar is giving us a strong bearish trend on the higher time frame. This is our multi-time frame indicator. So when we see these red dots, it's generally a stop run. They fire in the alerts and it brings us into the chart. And if you just traded every single one of these dots, well, I tend to go a little bit one step further because I want to increase my win rate. I mean, this is already a 10 out of 10 with this, with these last 10 signals here. But I mean, you know, look at that. you can be a bit more specific. See these ranges, we've got this brown section. This is the Asia. This is my trading range here. This is the London trading range where I'm looking for an entry. See this? That's ideal. That's what you want to see. It grinds up and bingo, we're away. Bingo. My mum used to say that. All right. What else have we got? Here's another one. Stop loss. Well, we've got these dots, but I mean that could have been, you know, that. And anyway, what I'm getting at is I want you to jump on board and join us on this journey and share the magic with me. Look at this. Go back 10 of these and they're all pretty good, guys. I mean, it doesn't get much better than that. I'm just looking for these dots to bring us into the market. We're always going to go 1-to-1 risk reward and take most of our position off so that we are in the money at 1-to-1. So there's the dot here, and then the pullback into the level was here, so that's the entry. 1-to-1 risk reward, and I mean, look, it doesn't matter whether, you know, you're going for something like this. And if you keep your position size consistent, that is $100, let's say, for example, and so is, if that's 1-to-1, and that's $100 on your account today, if you know what I mean. So keep your position size a percentage of your account, and it doesn't matter whether, you know, you get a few pips or a lot of pips. And the other thing you can do with it is, once you've closed 2/3 of your position, if you want to do that, then trail the rest. I mean, look at this. Look at that. There's a smile. Oh, okay. Now this one here, we don't take it. Why? Because look at our indicator. It's giving us 50% green and 50% red down here. All right, so we don't touch it. We wait for, well, we've got this. It's still 50-50, but then this red bar kicked in. So that would have been a thing. In any case, I think you get the picture. So with that, guys, comment, click the link below, jump on board with us. Have a great day. See you in the next one.